Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we're counting down to the next VRIC January 21st and 22nd. Tickets are now available, so hit the link in the description below to get your tickets. And today's guest is the CEO and Chief Investment Officer of U.S. Global Investors and the Executive Chairman of Hive Blockchain. It's Mr. Frank Holmes. It's an honor to have you on the show.
Great to be with you from Serbia.
Yes, I am in Novi Sad, Serbia. I want to get started with gold and particularly physical gold. And in your view, why it might be important to be holding gold at this point in time. Obviously, we've seen the erosion of trust in the banking sector. We continue to have a hot war in Ukraine. The list kind of goes on and on for a lot of the traditional reasons why physical gold bullion is so important. So I'm wondering why you think investors should have at least some allocation to physical gold, and how much do you think that should be?
Well, first of all, I think it should be the 10% golden rule. And it just has shown this century, in the past 23 years, gold has outperformed the S&P more than 2 to 1. So that shares with this idea of owning 10% and rebalancing each year. So when you have a great move in the gold market, that you take some profits and you go back into the stocks. If you're an index or diversifier, that sort of thought process shows. And I guess the largest hedge fund in the world, Bridgewater's Ray Dalio, the visionary, has always been a strong advocate of having gold in your portfolio, and he'll go from 10 to 25% in his parity trading. So I think it's just wise to look at gold as an asset class. But what we all have to recognize is that there's two big drivers for gold demand, and I've characterized them in simple emotional words. There's the great love trade and the fear trade. What dominates the psychic of most people in North America is the fear trade, but fear is only 40% of the demand equation. It's actually love. And when you look at the love trade, it's jewelry, but it's also, this is the year of the rabbit. So gold rabbits you'll see in Singapore and Hong Kong and Shanghai in all the jewelry stores. There's this sort of propensity in the Middle East also to give gold at various holidays like we have in India. So what is the data point that you look at is rising GDP per capita. And what we've seen in the past 23 years is significant rising GDP per capita from China and India, affectionately known as Chindia, which is 40% of the world's population. Then you throw in Southeast Asia and you throw in the Middle East, and all of a sudden you're over 50% of the world's population love gold. And so I think that by the dip, and every time there's been a big sell-off due to fear trade, or as some believe, manipulation by bankers suppressing the price of gold, you see that all of a sudden physical demand comes for love. So I'm just a big, strong proponent that you should be buying this. Second of all, the most, even look at it, is the most loved political leader in the world right now is Modi. And so what he did it with Biden a couple of weeks ago in America was just extremely positive. So the Indian influence around the world is going to be what we had 20 years ago with China. And I think that India's ability to have rising GDP per capita to catch up and surpass, like their population now has surpassed China, is huge. So it's huge for commodity demand, and it's huge in particular for gold.
And so let's talk about the equities for a moment, and particularly the junior mining space, because we're seeing a lot of people throwing in the towel, people's portfolios deeply in the red. I'm seeing a lot of it online, people commiserating that, they regret ever getting into these stocks in the first place, and now they needed them to go up so much just to break even. So with this sort of negative sentiment, is this a time to actually be looking at the space for potential opportunity in your view?
Well, I think that a lot of the executives are sort of have a legacy mindset. They just can't compete with the crypto ecosystem. And what happens in the crypto ecosystem is once again, and we look at gold and we look at Bitcoin, these are decentralized assets. Our medium of communicating right now on this video streaming podcast is really decentralized media. So a lot of young people will go buy a crypto coin and then post a meme on Reddit. And you don't get that with junior gold. You don't. Everyone thinks you got to go hire a marketing department. No, it's the idea that and the concept of buy the dip and hold on for dear life. You never hear that with gold investment. So it's a different psychology. I would also share with you is that it's happened like its own metaverse outside of the normal capital markets. This growth in the digital world, and gaming has been part of that. And the young kids that have been good gamers have been able to get digital money. And that digital money allows them to upgrade and buy new software, right, for their gaming. This has allowed itself the crypto ecosystem to grow in that system. So I think that that's a sheer competition, so that the leaders, the CEOs of junior mining companies have to change their mindset. Two is a big headwind, and the headwind is Canada. Canada's always been 70% of mining, sort of the center for geologists going around the world exploring and risk taking. But the five big banks have basically pushed out and reinterpret the rule, the fiduciary rule, that the fiduciary rule has nothing to do with the concept of what America looks at versus what Canada. In Canada's age. So that person like myself, who has bigger disposable income to speculate, it makes it very difficult to go speculate in junior mining because it's deemed not suitable. But I can go to the racetrack and I can go to any casino, but I can't turn around and speculate. So that impacts price discovery. And so I think that there's a disconnect here with the big controlling banking system. I was talking to a young fintech expert the other day, and he was saying that Canada's banks have shut down fintech from coming to Canada. I was with one of the major banks here in Toronto, and I'm here for another week in Toronto. And it was interesting hearing that their fintech analyst is in New York. It's not here. So you're seeing the idea of financial technology breakthroughs, such as the whole crypto ecosystem. It's booming in England. It's much stronger in the US. So I think the banks and the regulatory world has to reposition themselves of how they look at speculation in the junior mining, so that people can actually make it that they can speculate more readily. In the US, it's not about your age as much as about your best. Is it the cheapest price? It's all about the fiduciary rule, really focused around, if me selling you a product where you could turn around and get it half the price cheaper somewhere else, that's my fiduciary. So these interpretations are different for the same title. So I think it's layers of these events taking place that's impacted the operative world called price discovery. And 3 years ago in America, they came up with a policy which was bizarre because it happened to come from 2008, 09 prices with banks and small loans. Where there was needed price discovery. But that rule that was for loans all of a sudden showed up for the stock market in equity mutual funds. And so if a stock doesn't have a certain percentage of volume traded relative to its market cap, or the spread gets too wide between the bid and ask, is deemed illiquid or goes into a basket. And that basket is all of a sudden gets so much focus that mutual fund managers do not want to go every quarter to explain why they're buying this new junior mining company in Canada. And so they automatically are not investors. So we're seeing a combination. It's not just one factor that's there, but you can overcome that with innovation. You can overcome that. And I gave a presentation recently in Quebec City where and there was a great turnout. There was something close to 600 people came out. One day was Junior Gold, and Peter Maroney opened up the conference. Rick Rule was there along with myself, and I gave a whole presentation that the leaders of junior mining companies have to change their mindset. Like we were talking earlier about Gianni, they went out and wrote a book on copper, and then went across the country talking about copper, and he formed a royalty company for copper, and then he did lithium. So that he took the best business model, the royalty model, he turned around and became sort of an advocate, driving his Tesla all through North America. Things like that is that leadership and visionaries have to think differently in telling their story.
Very comprehensive breakdown, a lot of points that I actually hadn't considered before. So Thank you for that. I do want to shift to royalties
I
because
just
you
want to
did.
add, I just want to add, the young Lundin boys, they went and climbed Mount Everest in honor of their dad. They understand these achievements show up on Instagram, and then they talk about one of their video conferences. Jack is making a presentation, and there it is. It's on Instagram. They're relating to who would be a potential influencer on Instagram. Now, when you go to Instagram, it's something like 80% of the influencers are women. And when you go to Twitter and Reddit, it's reverse, it's men, young men. So it's recognizing these decentralized, these platforms are so important in narrating your story.
Absolutely. Social media is totally key. And I agree, a lot of junior mining CEOs have not caught up with that yet. So definitely another great point. I do want to talk about royalties because you did mention royalties a moment ago, copper royalties, specifically talking about our mutual friend, Johnny Kovacevic, and his efforts. But you have mentioned previously in an interview that you think the royalty business model is a superior business model. So could you expand on that for us and let us know what you're seeing there when it comes to the royalty space?
Well, I'm very blessed to, be influenced and mentored by people like Seymour Schulich and Pierre Lassonde. In fact, when I left research, I went over to investment banking, and my first deal was Franco Nevada. And the original idea was not just to go into royalties, but Seymour Schulich had this tremendous expertise managing Bronfman money, buying oil and gas royalties. And he says to Pierre, let's do it in the gold business. We'll be the first. We'll have first mover advantage. What does it do? It allows you to have intellectual capital, like you'd have someone writing code for a new coin or a new GBT chat. That concept of having a small group of intellectual capital, and that is shown up in the royalty business, a superior model, that the revenue per employee. So would you rather have Newmont, or which generates about $600,000 of revenue per employee, or Franco Nevada, which has the royalties on BRIC and Newmont's assets in Nevada, which generates $34 million in revenue per employee? So that's called the efficiency financial ratio, and it's just a better model. But you have to have really smart people around the table, and Randy Smallwood has done a phenomenal job in building Silver Wheaton, which originally was Ian Telfer's vision. At the time, Franco Nevada was owned by Newmont, and then it was spun out in 2008. And since it's been spun out, it's outperformed Buffett by 2-1. So it is a superior model, and you're seeing that in our Go AU New York listed ETF. It's outperformed all the other gold funds. This idea that, and it has the three big gold royalty companies, 10% weighting, and recalibrates every quarter. And then it looks at other stocks that have free cash flow and growth and momentum and attractive pricing, and it's outperformed. And a lot of them show up as royalty companies.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
I want to pivot to silver specifically now and get your thoughts. Some people have been pointing to the fact that it seems to be becoming more and more of an industrial metal and perhaps moving away from being a monetary metal, of course, which it has a very, very long history of. So what is your view there? Do you think gold will continue, or sorry, silver will continue to be seen as money, or is it shifted to more of an industrial metal, particularly with the green revolution, solar panels, EVs, and all these other technologies that require silver?
I don't think so. I think it's a warrant on gold, always has been. I think it always will be as a monetary asset. You're seeing more silver consumption for jewelry as the price of gold is around $2,000. And I think there's a big disconnect because silver prices, which you see quoted, try to go buy silver. Try to buy silver coins, not numismatics, but just buy them. And there's a huge premium. So I'm a big believer that it's not that the premium is going to drop. actually the price is going to rise to close the premium gap. That silver is greatly undervalued on a relative basis for other asset classes. And I think that gold has also been suppressed by the futures market. And who's behind it, I do not know. But this I know, and I know well, that the more that premium stays there, it more lends that the prices are going to rise. And I think that gold is understated by is probably valued most like $6,000. I think it trades up to that level more than it's going to fall to $1,500, as people like to say. And I think that silver trades through $50. And I think if you can go and buy, like they say in the crypto space, buy the dip and hold on for dear life. And you can do that with simple dollar cost programs, and you will get these big swings. And remember that this century, gold has been positive 82% of the time.
That is a very good statistic. And yeah, I agree. Gold and silver, especially when we're talking about the bullion, are something that you just hold on to. I hope I never have to sell my gold and silver. It's more of an insurance policy. And prices do fluctuate up and down. So that makes a lot of sense. I did want to talk about AI with you. Yeah.
Before you jump into AI, strongly recommend that grandparents that they buy silver coins and give them to their grandchildren. For them, that they're not going to immediately cash it in. If you buy them a toy or a game or something, it's forgotten about a month later. But that silver coin is always endearing to kids. They all love it's tangible. And I think the concept of that tangible asset is so important because they live in an intangible world. The metaverse and all the gaming is an intangible experience, an intangible reality. And you need to have something that's tangible. And I like to tell the story on diamonds. Diamonds are tangible. And De Beers in 47, all of a sudden, they control the supply of high quality diamonds. And they went out and hired Ayers & Co. to start a marketing program that people get engaged and demonstrate their commitment for love and marriage. Marriage and love at the beginning is intangible. So you need something tangible to make this commitment to something that's intangible. And diamond demand went from 3% of people getting engaged to 80%. Then De Beers did it again in Japan in 65. And then the Russians all of a sudden found Kimberlite and started flooding the diamond market. But it's really quite fascinating that the adoption, if enough people believe, and that's what's happening with Bitcoin and that whole crypto space as more and more people adopt to peer-to-peer, like the gold market is a decentralized mechanism, Bitcoin is decentralized. And now you have the advent of the great digital transformation is artificial intelligence, which has been around. We started playing with neural networks in 1998 at US Global Investors, trying to understand how fast intermarket relationships work and whether patterns and correlations or whether big inverse relationships. Well, that's evolved, and GPT chat has basically exploded. It's the fastest adoption of anything that's come out that's a digital app. 100 million downloads in 2 months is unprecedented. So I do think that AI is going to evolve and grow quickly. I think that when we look at the significance of this past quarter is that AI public companies directly and indirectly appreciated $1 trillion. $1 trillion. And if you look at another sort of decentralized source of information is Investors Business Daily. They do publish the newspaper once a week on the weekend, basically, but it's predominantly through the internet. They do a great job on covering those stocks. And it's not like the bubble we had in the tech bubble, I'm so often asked, because in the tech bubble, there was no revenue. It was about eyeballs. There was no source of revenue. There's no application yet. That didn't come until after the tech bubble blow up. Here we have revenue, and here you have very strong revenue models, and it goes to show that there is a lack of data centers. And one of the things we did at Hive was we were the first to start buying and building our own data centers, decentralized. And we also went into AI early. And one of the things we learned is like buying a car, but there's no tires. You go get these NVIDIA chips, but you need to have a server. And if you're not going to have their server, which now they're selling a whole package, you had to go get these other servers, and the servers are very critical. So we are seeing that now we're buying these new servers by Super Microchip, and they work beautifully. And our beta site of only 40 of our 38,000 machines threw off $250,000 this past quarter. And now we're going to add 40 of these new servers. That means we're going to double our capacity every month going forward. Why? Because there's a huge need because of GPT chat. And I was talking to a mother the other day, and basically she's put it on everything, how she manages driving through traffic in Toronto, how she writes letters to teachers, how she organizes the kids' homework, etc. So it has so many of these at-home applications in addition to business. We're using it to try it, but we found something that's important is that if you're going to write about the world of gold, you have to go and get the most recent reports and upload them into the system, because Google doesn't really upload all the research reports and the opinions, etc., that are current. They are going through this. They say they do it, but we have found that doesn't happen. So there is an element that as a person, you will not be replaced by GPT chat. But you have to learn how to use it. You don't have to know how to code. It can create websites for you if you just turn around and go through the tutorials. So it's very, very exciting. And I know as Hive, we're very excited about being part of that great digital transformation.
I do want to also discuss Bitcoin, which you brought up. But before we go there, I have to get your take on the BRICS nations announcing that they will be releasing a gold-backed currency. It now seems to be official. The Russian embassy in Kenya tweeted about it. I believe RT, the Russian English news channel, also discussed this. How impactful do you think this could be? There's a lot of people saying that this will be the death of the dollar. There's other people on the other end, such as Brent Johnson, saying that, the dollar's not going anywhere. I think the truth might lie somewhere in the middle, that this could be an alternative currency for trade, but not necessarily displacing the dollar as the world reserve currency. How do you see all this playing out?
Well, let's just look at GDPs. And if you compare the G7 to the BRIC countries, the G7 is much bigger. It's just much bigger. Two, and most important, is talking to Glencore metals traders recently since COVID. They were in China, and they were informing me that they can't use MasterCard, they can't use Visa. You have to use UniPay, or you have to turn around and upload cash onto your WeChat. So it's a closed system. Russia does not have an open social media system, neither does China. They have closed currencies. There's currency controls. So you really can't become a global fungible currency if you have currency controls. So it banters around for China wanting to try to dethrone the US dollar, but I don't think it's going to happen. I don't see people, Americans, trying to illegally immigrate into China, but you do get Chinese people trying to illegally immigrate into America. It's a real sort of simple looking at it, at where people flow and money flow. The concept is very bullish for gold, because it's the first time we saw the G20 in 2001 start using NMT, modern monetary theory, to sort of print money to get out of every problem. There's always going to be, in every economy, imbalances between fiscal and monetary policy. So the politicians drive the fiscal policies, and the central banks drive the monetary policies, and they're supposed to be independent. For a lot of the G20 countries, they're not. But these imbalances make gold is a wonderful asset to diversify. It's the rudder. It is the dagger board if you're a sailor, so you don't tip over when the wind blows heavily. It's recognizing having that 10% rule, and that it helps you balance the imbalance between monetary and fiscal policy per country. And we get it with the G20. So I don't see this idea, but I do see that they're recognizing, without admitting it, that the MMT, like political correctness, is a problem. And it just becomes a long-term problem. And so we're going to see gold as that asset class. Interesting enough, it was over a decade ago, China tried to get Saudi Arabia to take the renminbi for oil. And they declined, and they said you had to have more gold behind. And then we saw this steady accumulation of gold behind the renminbi. So China is the biggest gold producer in the world and the biggest buyer of gold. And there's a reason for it, to try to get global credibility. And I think that is probably a good wake-up call for other countries. And maybe Canada will all of a sudden recognize that they shouldn't be selling their gold so cheaply, that they should be turning around and having it as part of their overall diversified portfolio. And I think that one of the big difficulties with that is the Bank of International Settlements, who are very anti-gold unless they can control the gold swaps, who are very much anti-Bitcoin, but they're pro-Venezuela's currency, which is a controlled mechanism. The hypocrisy of that is immense. But what we have seen is that when countries like Zimbabwe or Bolivia, you could see this take place with Argentina. They left it, and their currency inflation went through the roof. They had the U.S. dollar as a portion. Zimbabwe to stabilize their runaway inflation. They don't have good monetary policy that's independent of the government. Then owning the U.S. dollar as their monetary discipline has helped many countries get control of their inflation. So I don't see that as going to be with the renminbi. And what happens now is the Saudis immediately have to sell and convert. There's a big swap trade to get U.S. dollars. So I think that the U.S. dollars, the British pound, are going to remain very strong currencies, along with the yen and the euro.
I do want to finish on Bitcoin here. And we've obviously seen quite a few developments in the space recently. BlackRock applying for a spot ETF. The SEC has come back and said that they need to refile, but there's a lot of other big financial players coming into the scene in regards to Bitcoin shortly after the SEC announced lawsuits against Binance and all of these exchanges, which leads some to think there's a bit of a conspiracy behind it. We did see the price of Bitcoin rise quite dramatically. It has not come back down since. It's hovering around the $30,000, $31,000 level. What do you make of the recent price action and events surrounding Bitcoin? Do you think Bitcoin could actually become a legitimate currency at any point in time? And if you could also talk to us about how Bitcoin mining companies like Hive, how do you operate, and how you could also provide upside to investors?
I think it's a mistake by a lot of crypto people to try to call Bitcoin money. It's like saying gold is money. It's not money in my world. It is an incredible decentralized alternative asset class, like art. And the fact that if you look at Andy Warhol pieces of art, such as Queen Elizabeth, when she passed away, it doubled. If you look at Mao, as the rising GDP of China took off, Mao prints started at 1,000, went to 10,000, went to $250,000. And so whenever you have limited supply and you have global adoption and money printing and global growth, then that asset class will grow. And I think that gold is one of those, like I said, it's surprising to people that gold has been up 82% of the time this century. Gold has outperformed the S&P 2-to-1. You never hear that in mainstream. I'll give you another interesting tidbit about gold. I'm going to come back to Bitcoin, is that since COVID, Bitcoin's volatility is less than the stock market. And prior to that, it was always more. And so I see that happening with Bitcoin, and I see Bitcoin becoming a respected digital asset class. And you have to make gold, you need electricity. To turn around and make Bitcoin, you need electricity. You need an infrastructure building of ASIC chips and a data center, just like you need to have a refining mechanism. You need a smeltering mechanism and drilling and all this hardcore equipment for gold mining. And you need electricity to melt it down and get this refined bar. You got to think this way: is you create a tangible asset, and Bitcoin's an intangible asset. In my age, we're going to transfer over baby boomers $10 trillion to millennials and generation X, Y, and Z. And that world, your world, has grown up in the digital world. And so you can relate to the intangibly. I grew up with monopoly money. You never grew up with monopoly money. You grew up with digital money. The closest that I can relate to growing up was my mileage points. And you think of the mileage points of currency debasement. Well, guess what the airlines have all done to their mileage points? It used to be 220,000 points to upgrade to business class. Now they want to even buy tickets 200,000. But it is a form of digital money, if you want to take a look at that concept. But I look at it as being much more as an important alternative asset class. I think over time, central banks will end up owning Bitcoin. It's an amazing algorithm. What people don't realize is that blockchain was created in '91 by two scientists at Berkeley for the concept of moving blocks of money and information. And then 10 years later, the Defense Department of the US government and DARPA creates what's called SAW 256. The encryption that's used for facial recognition on your iPhone is also the fusion with the blockchain that creates Bitcoin. And then 8 years later comes out Bitcoin. It's an incredible, it's like a Mozart symphony. It's so beautifully done. And so I think that Bitcoin is going to become part of that. And what I found interesting enough is that one Bitcoin is equivalent to 100 million Satoshis. And what we have found in our universe of all the Bitcoins we hodl, that we have many Satoshis which are very valuable. So that means something that's worth 2 cents, 200 Satoshis is worth $250,000 because they happen at a pivot point, an important point in the history of Bitcoin. That is like art. When you limit supply and you have these inflection points that they become extremely valuable because of limited supply. So I think that Bitcoin, and I think that Hive is extremely well positioned. We're going to double our exahash over the next 6 months, and we're building out our AI at HPC data centers. We only use green energy. We're in Sweden, Iceland, and Canada, and we're the first really to what they call balance the grid. We've been doing that for many years in Sweden. And what's really cool is how we're like a cooling system. What we have in La Chute in Montreal, we heat a liquid that heats a building 5 times our size. And our vision, what you're seeing, Bloomberg just did an article in Paris, is to have agricultural centers right in the heart of Paris. We are building a 90,000 square foot building greenhouse in northern Sweden, 100 miles south of the Arctic Circle, and it will make all the tomatoes and cucumbers necessary, so there'll be no carbon footprint from Spain or from Italy going to northern Sweden. They'll be able to retain. That all comes from mining Bitcoin and HPC. So this idea of recycling a molecule of green energy can go over many times. And I'm so excited about these sort of endless ideas of innovation in that system. So stay long and buy the dip, gold, silver, and companies like Hive.
Great. Well, I'll put a link in the description to the Hive website for people who want to check that out. And thank you so much, Frank, for coming on the show and sharing your knowledge with us. Yeah.
We're changing our name. You know, it's gone from Hive Blockchain to Hive Digital. And that officially gets done this week. We've gone through the pre-announcements. Why? Because we're not just a Bitcoin miner. We have a very innovative technology company. So I think it lends itself to better fit the name that's Hive Digital.
Great. Well, thank you once again, and definitely look forward to hopefully chatting again, continuing the conversation and getting an update on Hive.
Thank you, my friend. Thank you, and have a wonderful summer.